I think she hit the high points, absolutely, that you have this modest to moderate growth with a couple asterisks to the economy. Trade is one, and the tight labor market is another. I didn't like some of the stuff a little later on she talked about, which was the weakness in retail.
It's not that you didn't like Diana, it's just the stuff.
No, don't get me wrong. Right, it was the weakness in retail. But let me just pivot from that to this idea of the trade wars. A lot of talk right now. First of all, it's throughout the Beige Book. It's been for a while about who's winning and who's losing. So we threw together some stats from today. I have a quick data that you can take a look at. For example, on the left side, you have the GDP coming in 0.2 hotter. That's not bad. That's the U.S. Durable goods surprising to the upside. I'm kind of reserved on that. I want to see it repeat a couple months in a row. But in any event, and you've got unemployment at 50-year low, then industrial profits in China are down. PMI is down for a 6th straight month. Exports down 17 straight monthly drops. It's a little more even than maybe that appears. I put together some charts. Here's the U.S. PMI in the next chart versus the Chinese Purchasing Managers Index. You can see in this next chart that we're down quite a bit, and they're down not quite as much. There you go. Bottom line is both are negative. I look at a chart like this, and I ask the question.
Both are below 50.
Well, you ask the question, who's winning the trade war?
Who's losing least?
We're both losing. That's right. And who's losing least? And now I've actually got some numbers I can put to all this. Take a look here at the change in imports and exports by, what is this first chart here, by percentage terms. We're actually, our exports to China are down more as a percentage than Chinese imports are to the U.S. Are you with me on that?
Yep. I got it.
Okay. That's good.
Is that agricultural mostly?
That's total. Well, no, it's all
it's
all
everything,
products.
but I mean, I
could have broken it down by product. I'll give you that next week, next Monday.
Good.
But now take a look at a percentage, and you can. In dollar terms, the next one.
Yeah.
Huge. $53 billion of imports from China. We're down year to date, January through September, 19 versus 18. I think those two charts, actually all three charts, tell you why they're closer to a deal. We're hurting, maybe not as much as the Chinese, but we're hurting. And the Chinese are hurting a lot more, I think, when it comes to dollar terms, and we're hurting more in percentage terms.
Indulge me this question, because it's always it kind of rolls around in the back of my head when I see Chinese data. How much do you believe it? How reliable is it?
I don't think that anybody believes it's reliable. I think if you call up that first chart.
In other words, if we compare PMIs in China and PMIs in the U.S.
I believe the PMIs are private sector.
Better?
Yeah.
I think that's a private sector number, so I believe that a little bit more.
Than a government number.
Also, if you look at the idea that they reported that it's negative, I think there's some truth in that, which is to the extent that if they were really going to lie about it, you'd make everything rosy. So I trust it directionally, though not perhaps as much as magnitude. Everybody has a problem with the Chinese data. Nobody believes it. But I think if you look at GDP, for example, which has come down 7, 6, 5, I think people believe directionally that's accurate.
Right.
Magnitude, nobody
knows?
Nobody knows. Good question.